Welcome to the December 10th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and once a week this video replaces the written commentary portion of our report. Hopefully it serves a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. As you can see, we try to keep it pretty simple. We have a 10, 20 EMA, 50 and a 200 SMA, a relative strength line versus the S&P 500, and then we have volume. And for us, price is king, volume is important, and we use a few key moving averages to guide us along the way. So with that out of the way, let's get to tonight's video. We're going to run through a few broad market averages, then cover open positions in our model portfolio, and finally we'll take a look and see what's out there in terms of new setups. On the NASDAQ, closed 1.7% lower, though it did so on lighter volume, so technically not a distribution day. An ugly day nonetheless, closed at the lows of the day after a false move above the prior day's high. So an outside day, closed below the 20-day EMA, but I believe just about 0.3% below the 21 EMA. If it closes 1% or more below the 21 EMA, that would put our timing model back on a sell signal. And given the way the market sold off in the afternoon, the odds are favorable for further selling on Friday, with a potential target of the 50-day MA. And the NASDAQ could come back down to that level and be just fine overall and still be in base mode. And several stocks on our watch list could use a few more weeks of chop. In the S&P 500, not as bad technically as the NASDAQ, as it's still above the rising 10 and 20-day moving averages. And IWP, which is our proxy for growth stocks, looks pretty ugly. Couldn't even get back above the 20-day EMA, which is still below the 50-day SMA. And IWM, sort of the same look here, just a nasty sell-off, a bounce into the 20, and looks like it's at the very least going to test this prior swing low. And last up is SMH, which is the semiconductor ETF. And the semis have led the market higher, so I think it's worth looking at. SMH doesn't want much to do with this 315 area and could really use a few more weeks of chop, hopefully above the reversal candle that printed last week. Speaking of semis, that leads us to open positions in the model portfolio. We only have two currently. NVIDIA, which we bought around 308 on the 12.7 gap up, closed below the 20-day EMA on higher than average volume. Not a good sign. We'll just have to see what happens tomorrow if the price is able to reverse around the 295 to 300 area. And Tesla, which we entered around 1045, I believe. It's right around here. Based upon the nice reversal candle and then gap up the following day. It pulled back into the 1,000 support level and the 50-day MA. So we'd like to see the price action hold up around this area, or at the very least the 980 area, which is about 3% or so below the 50. And generally speaking, for strong reversal candles, we don't want to see the price action retrace more than half to 61.8% of the candles. So this is a Fibo level at 50% is 986, and then at 61.8 would be 977. So these Fibos are based on just the high to low of the reversal candle. All right, so we have Tesla and NVIDIA, two half positions still open. We'll see if these can hold up. And if they don't, we could soon be in 100% cash position. Given Thursday's action, there's just no reason to add new long exposure unless there's just a powerful reversal in the market to the upside. And if that were the case, then some of the stocks that are hanging out near the high, such as MU, if it can get through the high, Thursday's high after an ugly close, that would be interesting. Another one would be QCOM if it can get back through this downtrend line, especially after this type of close. PI, if it can get back through the 85 area. And on the short side, there are a few setups out there. Probably just going to cover one tonight in TWLO, TWLO. Note the strong downtrend. 250, 20, and 10 are all in order and trending lower. There was a breakdown below an obvious support level with a bounce back into that support, which is now resistance. Heavy volume selling action on Thursday, stalling at the 20. Look to go short beneath Thursday's low. And if it were to open lower and then bounce back into this 270 area where the 20 EMA is, that could be a chance to enter as well. So if it does gap lower, you don't want to chase, just wait for the bounce. And again, this would just be for a quick swing trade down to the swing low. All right, so just a quick recap. We're really doing nothing on the long side right now due to Thursday's sell-off, which puts the new buy signal in jeopardy on the NASDAQ composite. Well, that's a wrap for tonight's video. Thanks for joining me, and we'll see you again next week.